Hey everybody, nice to be here with you today for Market Movers. My name is Mike Fairborn, sitting in for Ben Watson today. Folks, let's take a look and see how the markets did during the week. We'll look at market sectors, we'll look at some stocks as well, and what to be mindful of in terms of economic reports. Big one coming out next week. We'll definitely want to hit on that as well. I'm joined in the chat by a good friend, colleague of mine, Mr. Brent Moores. Appreciate Brent being here, and it is good to have him on board. He has noted there that you can follow us on X, Brent Moores CS. You got to spell it just as it looks there, just as it stated, Brent Moores CS. If you don't spell it right, you're bound to get an imposter there. I'm Mike Fairborn, as I mentioned, Mike Fairborn CS as well. Welcome to you, Riceberg. We've got Tatiana, Will, Greg, Mighty Mouse. How's it going? Let's dive on into it. Curious to see what you guys are looking at too. Let us know in the chat box any questions, comments that we could assist with. On that note, let's dive into some disclosures to get going. Information here is for general information purposes only and should not be considered an individualized recommendation. Now, spread trading must be done in a margin account. Options carry a high level of risk that are not suitable for all investors. Paper money software application is for educational purposes only. Past performance is no guarantee of future results, and investing does involve risk, including the loss of principal. Now, I did note there on options, although we won't be looking at options today, there is a disclosure on that. Okay, let's do this. Let's pull up our standard charts here just to get rolling here. Want to take a look at, first and foremost, a topic that I do discuss pretty frequently, actually, in my markets and sectors class on Wednesdays, and that is on market posture. Market posture, just real quick, are we bullish, bearish, big picture? How are we looking on that? What is that core underlying sort of that intermediate long-term trend looking like right now? And as you can see, we do have a couple of different exponential moving averages on here on our weekly chart. It's a 10-year weekly in total, but I've zoomed in on it so we can actually see it a little bit better. But notice the expansion that you see between these two ranges here. As you are widening that out, it does imply a strengthening of that trend. So that trend continues to remain actually quite strong right now. And that is all else equal, folks, a bullish indication for market conditions going forward, regardless of seasonality, which tends to be a little bit weaker this time of season. September tends to be a weaker month, but key word there is tends, right? Doesn't have to be. So we looked at that. So bullish posture right now clearly on the markets. In fact, even as we see it here, the 10-period exponential moving average moving up really, really quite sharp here. Sharply. Look at the direction, the angle of that line, that blue line there. Now, if I just zoom back a little bit here, just to show you, we do have a couple of these ascending triangles, and it's looking a lot like the initial ascending triangle that we did have back, really forming through much of June, really the end of May, breaking out at the end of June, as you can see right there, and extending higher. Ascending triangle, the highs and the lows are getting tighter and tighter, but yet there's an upward slope to it. You'll notice we see the same thing over here. And what did we do for the last, well, going back to Wednesday, we were actually pausing. We hit it, we hit. We hit on Wednesday too, and then we broke out higher. Okay, and this could kind of tie in to maybe an expectation of, well, what did you see over here? Sometimes this can mean an extended move higher, as you're looking at that right now. Previously, I mean, that was just a good example. Sometimes within an existing trend, a trend might be strong enough that you get basically just ascending triangles. And one interesting note on this move right here, if you look back long periods of time, and I've looked back, this represents off of these lows, and I couldn't find it anywhere over a time frame on the S&P 500 index. I might have missed it, but I don't think I did. But just keep in mind, this move that we saw off our lows to where we are right now, 36, over this time frame, I've not seen a 36% bounce over there. I think some of that has to do, of course, with the tariff situation that we saw. And what did that cause? Concern, uncertainty. We saw the dip, and then we saw the rally. Let's just say if we take it at the general high range before the dip, though. Okay, that's up 7%. And so not nearly as really close to 8%. Still a good run. In fact, on the year itself, starting off about right here, how are we doing on the year thus far? A yearly check-in of about 12 point 3% approximately. But that 36% move off that bottom, I can't find it anywhere over that time frame that we're looking at right here, which is 1, 2, 3, 4, 5, basically 5 months. It's an incredible move in the S&P 500 index. What could be also potentially fueling a move like this as well. That could fuel it more, could fuel it higher, I should say. Could be an announcement that we might have here. Let me just zoom on down to our oh, I'm already in that. Sorry, right here. I just put a reminder in that the FOMC meeting begins next Tuesday with the rate announcement Wednesday. And the last time I looked, it's about a probability of 90 plus, put a plus in there, percent, that we will get a 25 basis points cut to interest rates. Now, it could be more, it might not happen, but it is actually quite high. Just a view of the 10-year contract. That was a symmetrical triangle that we broke down, although today, as you can actually see there, just on the X post there, that it is actually bouncing a little bit, which is interesting too. So we'll see what does in fact unfold. It's always interesting to see the interest rates bounce higher when the expectation of a cut is coming. I know there are reasons for it, but I've always just kind of tried to wrap my head around it. It is interesting. I know there's more things at play there. That's a look at the X profile. If you wanted to take a look at that, be sure and check out Brent's as well. But that is a look, just as a reminder, that is next week. We've been waiting for, the markets, I should say, have been waiting for that September timeframe for the potential cut for quite a while. Now, what's been moving out there? If I go like this and just take a quick peek, and we can say over here, we know that what's comprised, we look at the S&P 500. Well, some of the Mag 7s are up again. Oracle was big up recently this last week. In fact, I think Larry Ellison, at least on that day, okay, Wednesday, he was the richest man in the world. I don't know if that's the case still because the price has gone down. He still might be. So you got, Larry Ellison, you got Elon Musk over here. Tesla's up today. We have seen some tech moving as of late. And as you can see, just the size of these blocks, the technology stocks do make a big difference, like the Mag 7. As a matter of fact, I do have a look. I've just typed in the Mag 7. There is an ETF for that, but we don't discuss ETFs in this class. And so that is just everything all lined up. It does include Tesla. It's got others in there, and you can see that it is breaking out as well. Now, that's what oftentimes has historically led markets higher. Under an interest rate cut environment, growth stocks tend to do really quite well. So there are others as well. Discretionaries tend to do okay too. Pretty good. They can. Historically, they have in many cases. But that is an interesting development as well. If that continues to rise, well, that could be considered a positive as well. And by the way, it's always interesting too to look when we look at the SPX, folks, always to try to wrap your mind around it to get a sense of where the at least this is what I think is interesting, where the market breadth is. Just do the EW at the end and just see how that's doing as well. Now, if that continues to break out higher too, it just means broad participation across the S&P 500 spectrum here. A lot of these companies don't amount to much, as you can see over here. Very little. Some of these squares, you can't even read what they are. Gosh, they're small. But when you equal weight these blocks as opposed to a market weighted index like the S&P, and you can still see that we're going higher with the equal weight. I had a line drawn earlier this week and we broke out above there. Breadth can be really important for an extension of the trend. As a matter of fact, what you'll find in a lot of cases is prices going, if you start to break down here, you start to get a number of 52-week new lows. And when you get a lot of 52-week new lows and highs at the same time happening, there tends to be a chasm in the market and a break or a fracturing, and we can start to really break down lower lows, lower highs. I'm just going to share with you one thing that I do talk about in my Wednesday class where we hit markets and sectors, because this is interesting just to keep an eye on if that scenario does unfold. In fact, it's right here. I'll just pull it up so you can see it. But it's this Hindenburg omen. And if you do not get something like the SPX EW, the equal weights. If they start to make lower lows and lower highs, keep a watch out for it, right? So there you go. You get these spikes down here. That is the Hindenburg Omen indicator. We have had none over here. So all else equal, that's a positive. Shoot, I brought it up, so I just thought I'd share it. There you go. All right. Well, let's talk about some market movers and what we've been seeing moving consistently still, GC, in terms of, big picture, well, gold in general. In fact, let's just do this. I'll just say something like an AEM, a big, this is a gold miner, and it's been noted for, and this is really US based as opposed to others that haven't done as well. But look at the flag patterns through here. Another one. AEM, there are others out there. There's an ETF for gold miners as well. Here's another one, NEM. That's been on a tear. So too has Barrick. And then you get some of the silver. There are silver miners out there too. So those have been doing actually pretty strong as well. Now, some individuals too will look at other areas out there in the market that have been showing strength as well. A lot of consolidations. What I want to do right now, though, is zoom back in and let's look and just see what that 5-day percent change is on the S&P 500 sectors. Narrow this down just a little bit so we can see the performance thus far. Oh, hit the wrong one. I'm going down under public. I'm going to go to sector indices here. There they are. Those are all 11 sector indices in the S&P 500. Over the last 5 days, what's been performing? There it is. We just mentioned it. What performs with expectation of interest rate cuts and the actual cuts themselves? Historically, it's pretty common. Doesn't mean it's going to happen every time, but you look for those areas. Utilities as well. There's energy. Here's discretionary. That too has been, sometimes the financials will too. But there you go. Some of the usual suspects as it comes to sector performance around interest rate hikes. And so we could look at a number of the different stocks within this group and just see how they've been performing as well. But before I do that, just a quick look. We've seen this. Why don't we now just look at a sector rotation grid and see what's really been performing in terms of the last little bit of time. I don't know why these labels keep falling off. But here, I'll point out a few here for you. So think about it this way. This is, by the way, what we're looking at here is, we'll pull up an example. Here's our discretionary. I just talked about it. I'm going to maximize it. It's over here, actually. Maximize the sell. And you'll notice with the discretionaries, over the time frame, in terms of interest rate expectations, we have seen, just draw a line here, crossed here. What have we seen? A pretty good move. If we're looking at this and we're saying somewhere like there, oh gosh, mouse slipped off the keyboard, that'd be like a 45-degree angle, but there's been a really good performance in discretionary. Okay, well, that ties into interest rates. Let's pull this back out and we'll look at the other one. By the way, what was this one? Financials. Okay, so financials have dipped, though, although they had a decent week relative to the S&P. So we're looking at the relative strength, a very interesting indicator. It's not the RSI, completely different actually. That's the relative strength of an individual stock itself. This is relative strength relative to the S&P 500. So if the line is going down, it's underperforming the S&P. If it's going up, it's outperforming the S&P, and that's where the potential for sector rotation. Where might the money be moving into? Okay, here's financials. I'll correct that later. But here, look what we got over here. A long extended run we see in infotech. Healthcare has actually kind of flagged a little bit off the bottom. But what are some of the others? I'll tell you one that fits very, very close to technology, and that is communication services. Look at that strength just over that time frame we were talking about. Where are some of the, maybe some of the bigger gains coming in? Discretionary, communication services, and technology. Some really interesting strength. This is kind of maybe a sort of a little bit of a rounded pattern here at the bottom. We'll see what does actually unfold here. But relative to the other sectors, is anybody else seeing strength there? I mean, utilities had a good week, and interest rates can interest rate cuts can have a positive impact on utilities because they are so heavily capitalized. If you cut interest rates, well, that probably cuts their interest payments. But for real growth, discretionaries, infotech, communication services really tied into the infotech group. So what we can do now, since we went back and forth again, we're going to go back again. We're going to go back and take a look at the market watch. But in this case, what I want to do is just pull up an industry here and see what's really been performing just right off the market watch tab. We can dive in here and actually, you know what? It's not such a great idea because if we do this, by the way, we're not looking at the S&P 500 sectors. When we just come down here, huge, very, very important note. If I go down here and go to technology and say all, I mean, you can do this, but you're going to get something like this. This guy's had a 5-day change of, yeah, that's a big percent, right? I don't even know if that's real. So these are, well, penny type stocks, or they've been referred to as very, very cheap. So this doesn't work. I've always wanted to change this. So what we're going to have to do is actually use the scan tab to help us out. So let's do this. We'll take this off. We'll go over here. We are in the scan tab, stock hacker, subtab stock hacker. Scan in S&P 500 because we wanted to look at those same stocks that were accounting for those price moves, those relative strength price moves that could represent sector rotation relative to the S&P 500. We found them with those charts. Now let's go over here and look in that same basket. We want to scan in the S&P 500 and now intersect that with an industry. So now we're just dealing with the S&P 500 stocks that were relative or related to it. Maybe some of the more established companies. I mean, they've made it to the S&P 500. Doesn't mean they're going to go up or down. It just means that, they're on the index itself and there are requirements to be on there. Here we go. Infotech. Now we can come in here and we can add in. There's a 1-month change. Interesting. I was looking for it's over here. Got a lot of stuff in here. Long-term debt to capital. We probably don't need those. That was for a fundamentals class. We'll take them out right now. All right. We'll pull this guy up here and we'll move it up top right after the sector. I don't need that here. Looks good. Okay. So here we have it. There's our 5% 5-day change. And what's been really performing there? Well, Oracle was the winner, but now you guys can see. So what this is really, really helpful for when we look at market movers and what may be a market mover into next week. What are the sectors we can see? I've added that in. It's very important once we set this all up. What does the industry, what does that sub-industry focus in on? Well, the top one is software. But my gosh, there are a lot of semiconductors in here. That could be an interesting group. Now, we don't know. We want to maybe look at some of those charts and see how they're doing. Semis. Yeah, again, semiconductors, quite a few you get down here, but really kind of the leaders on the week. Now, does that mean that the others might not be ready? No, because there could be laggards as well. My suggestion is just to go ahead and take a look at maybe what a whole basket of these stocks might be maybe looking like. Okay, like let's just pull up a couple right now. This is one download electronic equipment. It's called Keys. Key Insight, I'm sorry. The Keys is the symbol, Keys. There we go. Okay, so this is like a really, really long-term, I don't know. It looks like sort of a long-term flag pattern, doesn't it? And sometimes when they extend longer, and they're in a tighter band, sometimes they can break out and maybe have the size of the move. That's what the flag pattern's all about, right? The extension of the pole going to the upside here. That's the question. We don't know if we would get that, but I will say this, in terms of money flow, it looks like, according to money flow, there's some volume accumulation there. It's breaking higher, clearly. Almost on par with this level here, getting very, very close to this high. So a target level could be there or higher based upon that indicator. So it's a great tool that lets you narrow down what it is you're after. And by the way, Keys wasn't up nearly as high, but notice what happened when I did that. What on earth is going on? Let me take out this one. We've hit our max level. Oh, like this. Yeah, customize and take out 1 month. There we go. Yeah. All right. Now that should work. We've only got 68 stocks. It's taking its time. Don't know. But anyways, that's the percent change is not quite adding up, and the whole thing's a little weird now. Okay. Oh, that's fine. We'll just look at it from here. Oh yeah, see, a lot of these are our performers. Gosh, up top. I don't know why it's doing that. It just slowed down. It was working before. Anyways, that's a great tool, and you've got it right at your fingertips. This is what I like to look at each and every week as I'm looking into the next week as to where the performance might come in at, right? Now it just worked. All right, I clicked in, caught up to speed, and there we go. Now, it's so simple, too, since we've got this pulled up. All we have to do, let's look at one more, though. What is GLW? Oh, a lot of strength, right? You can see that. Now, why these might be interesting stocks. Now, they're up right now, but notice that many of these have had this upward trajectory that has been kind of like this. Up big, little. These little moves. That could be interesting for somebody that wants to participate. Move like this. I know it's quite high, but even if we go like this a little bit, like here, that's very sideways. Look at this. That's why traders might be looking at focusing in on strength. Plenty of possible opportunities if they thought it may continue, and those are very, very small flag patterns. And notice after it, relatively much larger moves. In fact, there has to be larger moves because we're all the way up here. We got there for a reason, right? Smaller pullbacks and larger runs. You got it right there. Now, if I wanted to flip this and say, well, what was that other chart we were looking at? Well, we looked at, communication services, and what's in that group? To me, it's such an overlap with technology. I'll show you right here. Communication services. Look at this. So you got wireless and others in here. Let's click on that and let's scan. 23 stocks is all, but it's been doing really quite well. Wow. Yeah, this one's crazy. There was some sort of a major news announcement here, and I think most of that is today. So we'll kind of forget these two top ones. But if you go down through here, there's Alphabet, you've got Take-Two, Electronic Arts. Kind of like this is, in my mind, this is software still, right? Take-Two, Electronic Arts, it is software. They're putting it under home entertainment, but games are software too, but you get some of the wireless providers in here. We could take a look at some not doing so well. I know there was an announcement this week in terms of SpaceX. I want to say they bought $17 billion worth of licensing from EchoStar for wireless kind of expansion potential, and it knocked T-Mobile down quite a bit. That was one of the news, and then Verizon down as well. But let's take a look at some of these real quick. So what is Google doing? Yeah, so really quite strong there, as you can see. Here's EA. Somewhat of a flag pattern. Here is Take-Two. Okay, breaking above prior highs, a very, very small kind of a flag pattern here. Could draw some interest. How did we see all of these moves? It started with what was outperforming in the market and what might outperform in the next coming week based upon, those interest rate cuts, right? The sector rotation into those groups. Let's do one more over here too, because we were looking at consumer discretionary. So let's just see what's been doing well over here in our discretionary. In fact, I'm just going to do this. We'll just go to the top and select everything. But look, you can see what's in here. Automotives. I know we did a paper trade in one of my classes on O'Reilly. Now you guys get a sense of how I'm seeing some of this stuff. ORLY. It did pull up in that basket. Anybody want to venture to guess where we might have put our swing trade on? I teach a swing trade class on Tuesdays. And there's the breakout. And what can follow on a sharp breakout? flag pattern, and here is the ultimate, maybe, the retracement level that we were using. That's our T2 target right there. Flag patterns have a couple of different targets. You've got a pattern here, which is your target 1, is the way some traders will use it. And they've got a target 2, which represents the full move of the initial pull right there. And that's where you're seeing this particular stock. But like I said, this move in discretionaries has been there actually for quite a while, as you saw in that initial chart that we've shown. Let me share that too, just so you guys have it. There might have been a request for it. Oftentimes there is. It is not a think script, even though think scripts aren't guaranteed for timeliness or accuracy. But I'm going to share this so you guys have this grid anyhow. Put it in the chat. I want to make sure you are able to use these tools here. Okay. All right. And with that, well, hopefully we gave you some interesting tools to kind of take a look at this week. If you find this kind of information helpful, useful, those, by the way, those flag patterns, you see a lot of those flag patterns. If that's something that does resonate with you, here is just a quick look at our Trader Talks channel. We have a number of classes over here. Of course, this is our live class that's currently in progress right now. We're just kind of finishing it up. But if I encourage you to go to our playlists over here, you can need a lot of playlists from a number of different coaches. This is that one, and I just thought I'd bring it up. We saw a lot of flag patterns in this class. If you'd like to get some of the trading techniques that traders will use and what they look for in these classes, I will go ahead and post this into chat if that's of interest to you. And I do see many of you in there as well, but this is swing trading. All right, there it is. Yeah. All right, folks. Well, that is what I had for today. I wanted to make sure that we had some ideas on what to look at into next week. Okay, we can do that because there are big changes to the economy that could change the macro, and we're starting to see some of the historical movers that move higher when interest rates do dip lower or are expected to dip. Looking into those areas, there might be a lot of opportunities for trading specifically, but perhaps some for investing. One area, we'll just finish up on this, that some traders might look for a longer term change is maybe some of the more undervalued areas. This is healthcare. We talked about this. This is broken. Actually, this is not the chart of healthcare. It has begun to get a little bit stronger, but there might be, it's a lot of those, it's been kind of in a secular decline. And so traders might see that too as like, hey, there's some strength coming in here. But of course, we're tying everything into trends, the trends of the underlying securities, in this case, relative to the market. How are they performing? But hopefully we give you some tools and some things to look at next week as we talked about some movers today. Well, with that, be sure to subscribe, like the presentation if you did so. Thank you, Brent, so much for your help. Folks, it's always good to see you. Hope you have a fantastic weekend. I'll look forward to future discussions. And yeah, again, have a great weekend. Bye-bye.